Good morning to all traders and welcome to this week's first Market Insights video provided to you by Orbex. It's Monday, the 17th of February, and we're going to talk about the S&P 500 and also the cash index, the US index, as it seems to be rising as economic data in the US keep coming out a bit. Now, on the equity side of things, we are seeing the equities indexes, including, of course, the S&P 500, improving. And this seems to suggest that markets, at least cautiously, start hoping that the worst of the coronavirus is now over, as we've also seen some cases some countries, let's just say, completely eliminating the virus to some infected patients. Now, of course, there is a lot of ground to recover, okay, and the impact on the demand from China hasn't yet been felt because there is still more of that demand to be slow down. So I'm really not sure whether we're going to see the recovery on risk assets, for example, let's say the Aussie or the Kiwi, to start reversing at this stage. It might be indeed too early. I want to go ahead and start with the 2-hour charts on S&P. We've talked about this potentially being in the intermediate wave 3 currently, right? And then we should have the end of the 3, then the 4 and the 5, which still suggests that there is a lot of upside left until we finish the intermediate wave 5 at least. Now, down on the current low, we've had waves 1, 2, 3, and 4 completed, right? And now we're expecting wave 5 to complete this minute degree move to the upside. Now, taking you a little bit lower down, and let me just go further up a little bit just to see things clear. We've had this as wave 1, as wave 2, and now we're expecting wave 3, then 4 and 5. Although we have some bearish divergence signal here on the MACD, I think this is going to be only temporary. And as I've also labeled over here, I believe this is a 1, 2, 3. We have an expanded flat, a 4, and probably going to see a 5 that is going to extend, in my opinion, in a multiple degree impulse to the upside, and is going to end around the 3450 level, which is also the 100 Fibonacci extension of waves 1 and 2. Now, we always need wave 3 to be larger than wave 1, because wave 3 cannot be the smallest wave. So I'm really thinking at this at 3451 to see a correction, and then we're going to move down to 4. Potentially, if we just draw this nice ascending channel over here, right, with 2 lows, we're going to hit that level down here, and then we're probably going to get up to this very nice intersection level. We have potentially price ascending, master ascending trend line from channel, and let's say minor wave channel, minor degree channel as well over here. So the 3550, it's a very, very good level to consider actually this move to the upside ending. On the US index, we talked about this. Actually, I was looking at this with an impulsive move to the downside, as you very well know. Last week, we changed wave 1 to wave A, which means we've changed our view from impulse to the downside to a correction. And the current ABC and then ABC move seems to suggest that this is going to be a flat. Now, it could be a regular flat, which means that we're going to stop around 80.6 Fibonacci, which is a 98.28 as well. Very, very near to the current level, and then go lower for a similar low down here, which is the 96.30 level also. Okay, and if we also consider this ABC move, the 100 Fibonacci extension gets us to 99.20, which is very, very near that level. So we could get the move to the downside that we've been expecting over here, quite very, very near in the near term. We are seeing a bearish divergence signal here on the MACD, but it's not too strong, okay? So with that in mind, what could happen? We could have an extension of wave C here because it's quite impulsive, right? And these can take us up to the 99.66 first, if we miss that level, even for a few pips, and start reversing, we are seeing prices to go down that level as a flat. If we see prices breaking above that level, which is very possible, if we keep in mind that this move is very impulsive and this signal is only like something that is not really going to cause a reversal, we could get that extended to 145. This means that we're going to see an expanded flat, and we can expect prices to start moving lower, anywhere between, actually anywhere above the 100 psychological level. And then from there, we're looking to move down in an impulsive fifth, okay, which is going to end around 94.30.